Hello, everyone. My name is Jeffrey Kennedy, and welcome back to another episode of Market Academy. Well, I think I'm going to follow the same format this week that I did last week. And essentially what that is each day, today, Wednesday, and Thursday, we're going to look at a few issues that we've discussed in the past, see what's working, see what's not working. And then also, too, if I can find something interesting or exciting, I definitely want to bring that to your attention as well. And again, the reason I do that is really not to, again, recommend buy sell recs, recommendations. I don't do that. What I'm trying to do is, again, show you how I apply technical analysis. Remember, technical analysis is an umbrella term. It incorporates all kinds of indicators and oscillators and different disciplines like Wyckoff and the wave principle and point and figure. But how we apply this, not necessarily from an analytical perspective or a forecasting perspective, because that's fun. I love forecasting markets, anticipating, it's always fun being right the market, telling people, hey, the market's going to go up this much or this big. But really at the end of the day, I like to put this knowledge, these tools into action. And the way you do that is by trading. Okay, so at some point you do have to step up and trade your work. So what I do in Market Academy is show you how I apply these tools in an attempt to identify a high confidence or a high probability trade setup. So let's go back and take a look at Apple. We've had fun with Apple. We've talked about it a few times since, say, June, July. And here is a chart I published. This would have been back in July. Apple was trading about, say, maybe 210. And it looked like, this is what I was working as far as the operative wave count. One contracting triangle, A contracting triangle BC down in 2. It looked like the June low might be something that we could trade against. That's why I've got it identified as critical support. And then what I was looking for here was I was looking for the price of Apple to move up to about 220, 225. We had a lot of structural resistance in this market, and I thought that we could, logically push up to that area and then pull back in a second wave. Well, as you can see, we did not get to 220, 225. We did advance a little bit, but we certainly came back in that red wave 2, again, deeper than what I thought. Now, what I'm showing you here, on one point, if you're, say, maybe a little bit OCD, and sometimes I am, you would look at this interpretation and go, hey, you were all wrong. We didn't get up to 220, 225. We didn't come down. We fell much farther. But in the real world, this is pretty spot on work, because essentially what we're looking for is the movement of the market and the direction of the market. So going back to July, we were looking for an up-down sequence. We got an up-down sequence, but moreover, we were looking for something sizable and significant to the upside, because that would be wave 3, specifically wave 3 of 3. And as you can see, that's exactly what happened, because now we're trading 256. Now, I did follow up again with this not that long ago. This would have been back in August. Again, we had the 1, the 2, and then I thought this was another one here, another wave 1 advance. So I was looking again for a pullback to, say, 220, and then further rally in wave 3, targeting 260. Well, as you can see, we did work a wave 2 here, but it was a wave 2 of a running flat. So what we have here, again, updated wave count. And you'll notice every slide I've shown you, there's been some minor tweaks in what's happened with the analysis. So for example, this is what I was looking for. Again, the overall overriding idea, the narrative, was very, very much on point. But then as that real world price action came into play, we kind of made some minor adjustments to the overall narrative. This is what we have to do as Ellioticians, certainly, because as new price action unfolds, a lot of times it does indeed change the context of what we once thought. So rather than doing, for example, on this slide here, the one I published back in July, rather than doing the 1, 2, 1, 2, as you can see here, I think this makes more sense, where we work a much larger wave 2, and then another 1, 2. Okay, so here's the most recent work. Here's the most updated work. Now, what we can also to do is go ahead and raise our critical support level, certainly up to the August low. I don't think we have any business under that level, especially if we're in wave three, certainly wave three of three. But if everything continues to go according to plan, as you can see from what I see from an LA wave perspective, and again, there's a variety of different wave counts you could do, 1, 2, 1, 2, 1, 2. You certainly could work that. But even if I were to say, okay, hey, this is my first place or my number one wave count, and here's my second best guess, my second best wave count, all of which are hypotheses. These are my, say, educated decisions or choices here. Everything that I'm looking at continues to argue for further rally in Apple as we trade into October, November, and December, and ideally up to that 29300 handle. So in my opinion, I like what we're seeing here. We're looking up, prices are moving up. Okay, now next let's move on and take a look at another issue, and this would be Ethereum iShares Trust, or iShares Ethereum Trust, ticker symbol ETHA. Okay, now the last time we talked about this would have been back in August, and it looks pretty solid. 1 up, 2 down, wave 3. So we needed an ABC. We needed a correction. We needed a corrective phase. And since then, as you can see, prices really haven't done anything. So again, they've adhered to the overriding narrative. Did they follow or adhere to the actual specifics, the little lines that you see on the price chart? The answer to that is no. Sometimes it does, and it works great, and it's always exciting to see that. But again, this is the real world. The real world is kind of sloppy and messy. Yes, I like things neat and tidy, and I like black and white, but there's a lot of gray out there, as you well know. So in this instance here, the specifics of the narrative were wrong as far as the A, B, C, as you can see here, the red A, the red B, the red C, but the larger story, the narrative. This is why it's important to be able to step back so that you can see the forest through the trees. The overriding narrative is that, okay, hey, wave 3 is done. We've seen a nice rally from 16 to 36. The market now needs to pause in a fourth wave move. That's going to be a time-consuming move because it is a corrective wave. And then once complete, we should see the larger advance continue. So again, that narrative is still very much intact in Ethereum iShares, or iShares Ethereum. Okay, so what I would like to see, maybe moving into this week and into next week, finish up the month of September, trade into October. I think we stand still to see a good chance of additional advance in this market up into, say, that mid 40 handle, 43, 44, 45, and so on. Ideally, we'll see maybe a little bit more, say, selling in this market. Nothing severe, nothing dramatic, maybe just 1 to 3 days of decline, 1 to 3 days of weakness, maybe back down to $30. And then from there, I'll be looking for that final fifth wave move to develop. So again, from what I see going back to what we were talking about in August and in July and June in Ethereum, and also too Apple, everything is going according to plan. Now this is a cool chart. This is Coursera, ticker symbol COUR, and there's a lot of cool stuff going on this price chart that I thought I would show you. So for example, remember we were talking about some of my favorite trade setups. We look for a wave of equal or greater weight in the opposing direction, and then from there we anticipate and wait for a pullback into Fibonacci support. Okay, well, you can see the April advance was fairly close to the decline that we saw in late January. This is a wave of equal or greater weight in the opposing direction. And again, I'm not looking, it doesn't have to be 100%, it can be 90%. I certainly want to see something better than 80%. That's kind of like bare absolute minimum. But something to the tune, 90% advance or 90% retracement of the preceding decline, maybe 110%, but you kind of get the idea. This move up pretty much is equal in weight to the preceding decline. That's the key thing. Then we have our pullback into Fibonacci support right here. Moreover, the decline that we saw down from the high back in June, 3 waves. 3-wave move contained within parallel lines. Again, this is a counter trend move. Then we have the big gap, okay? Nice big acceleration gap. Well, we know that's going to certainly be a wave 3 price move, and in a moment I'll show you my wave count. You'll see exactly that I've done that. But now let's kind of play with that Kennedy timeline technique. So what I'm doing here is I got two significant highs, and all I'm going to do is just measure the duration from that high back in May to the low in July, and then the one in early June to the low in July. Copy those lines over here, and it gives me a window. This is the window, this is the time window when I anticipate or expect wave 4 to terminate. Okay? It's not only important to know, what market to look at or what's going to occur in a market, i.e. what's the trend, is the trend up or down, but when. When is the turn going to take place? Okay? This technique, the Kennedy timeline, allows you to do just that. So here is now the updated wave count. Again, critical support 1035. 1, 2, 3. That certainly looks like a 3. Pull back in 4. You can see again, once again, the value of the base channel trend lines. Number 1, confirmation of an impulsive price move. 2, support for your fourth wave pullback. And then, of course, we bring in our other indicators and oscillators. RSI bull market support is still very much intact. And then also too, if we take a look at the weekly chart level, you can see that, the Donchian average is now acting as support. And what we see in %R, the 5 and the 20, basically says every bout of weakness we've seen in Coursera on a weekly time frame, again, is best viewed as a counter trend move in a larger uptrending market. And if you go back and take a look at, say, some of the market academies that I did maybe a month or 2 months or 3 months ago, and then if you've been a longer term subscriber, go back even farther than that, you'll kind of see that I really stick to a very short list, a limited set of tools in my toolbox. And all we're doing in Market Academy, again, is the consistent application of those tried and true techniques. Well, that's about it for me for today. As always, thank you very, very much. Have a wonderful day, and I'll see you tomorrow.